Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly and welcome everybody once again for another amazing video of DIY investing. In yesterday's video we covered what a prior bear market In yesterday's video, we talked about what all of our prior bear markets have looked like and really what we need to see inside of our current consolidation to cement a true cycle low. For today's video, I'm going to be sharing with you guys every single major reversal point that we've ever had in any of the Bitcoin cycles, how it compares to the price action that we're seeing today, and what our true cycle bottom is actually going to be looking like as we're approaching the end of this year. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And if you're a new guy just getting into these markets, you want to make better decisions with your money, go ahead and download my free ebook and beginner's guide to crypto. This is an ebook that's going to teach you guys a lot of the basics for understanding investing. It's some of my most important strategies that have helped me out the most, which is why it's free to download. Links are in the description. And with that being said, let's jump right into this amazing video today. So yesterday's video, literally what we were talking about was every single one of our cycles from the bull run to the bear market. And what we were talking about was what each and every bear market looks like. The price structure itself can vary, we know this, but there's a couple different data points that we can pull off of that are very much the same each and every cycle. We can see that pretty much since 2013, when there was enough market cap inside of Bitcoin that we started following these cycles, what we notice here is the bear markets last almost exactly 1 year, and our last two bear markets were about 80.5% corrections, whereas where we're at right now is about 74%. So we're on par with some of those same things. We're not quite at that mid 80% sell-off, and so we're at this point where we could potentially see one more lower low, or maybe we can actually cement somewhat of a formation, a bottoming formation right now where we're at. We don't know for sure, and that's why it's important that we look to prior cycles as an understanding to how we can plan for both strategies. Now, understanding what we talked about yesterday, we know that after the 50-day moving average becomes resistance, that's what takes us for our final capitulation. On average, we get anywhere from about a 70 to, on average, we get anywhere from about a 60.5 to a 70% correction. We can see that that was the case here. And really, we could even draw this all the way over to back over here and see pretty much the same exact thing. The 50-week moving average becomes resistance. We fall about another 64% below that. This happened in this cycle, this happened in 2014, this happened in 2018, and we're literally right on par with those exact same things. And so we know that historically, we're pretty much checking off all of the things that are showing us, hey, a cycle low is about to be in if it's not already in. And so with all of these signals flashing, it's important to understand what is our actual cycle low going to look like. Is it going to look like prior cycles? Is it going to be completely unique? Let's talk about some of this stuff because I think it's really important that we're analyzing and talking about this stuff before all of this actually ends up playing out. Now, one of the big things that we're going to pay attention for is really just this price action itself. This cycle has been very unique if we're comparing it to any of the prior bull runs for Bitcoin. We didn't quite have the same type of parabolic blow off top that we were accustomed to seeing. The majority of our euphoria actually peaked. Over here at 65,000. This was where we saw SafeMoon, Dogecoin, Shiba Inu, all of the meme coins, all of DeFi, NFTs even started taking off over here. And so I would actually view 65K as our true euphoric cycle top. Many altcoins never made a new all-time high past the high that we made at 65,000. So when Bitcoin sold off, we bounced at 30K, and then we went up for another new all-time high. During this move here, there were certain altcoins that did actually make another impulse, but the vast majority of altcoins that had these big moves when Bitcoin ran up to 65,000, they ended up making lower highs right here. So as Bitcoin made a move to 69,000, many altcoins stopped short of their prior all-time highs, and then they started going down. And so this was a pretty unique cycle. It wasn't quite as parabolic. It wasn't quite as bullish as what we were expected to see. But I think a lot of that has to do with how much changes were inside of our economy. I mean, we go back down here, and we had the entire pandemic. The global pandemic starts, a bunch of money printed, causes the price to rise. So whenever they printed all of that money, it was inevitable that the price of assets were going to rise. That's what we saw with the stock market. And when the stock market rises, Bitcoin rises with it. We saw this big rise in value. Now, if you guys are going to notice here, right here, when Bitcoin was at the top at 69,000, when we topped in our cycle, this is literally where we had one of the biggest kind of fundamental events that have ever happened to really drive the price of Bitcoin lower. And what that was quantitative easing. Quantitative easing, so QE. Now, QE started right after the 2008 financial crisis. They had to keep injecting new stimulus into the economy to keep the markets from hyper-imploding. They were literally going to collapse completely. And so to keep all of our equity markets from collapse, after that financial crisis, they started quantitative easing, where they would just inject a little stimulus, and they did that over the course of 12 years, right? So all throughout our history of Bitcoin, we have had quantitative easing. Our entire Bitcoin cycle, quantitative easing started even before our chart. So we've only ever seen Bitcoin making these big parabolic cycles in a time where there was being new stimulus injected into the economy. And so what I find is interesting is throughout this entire cycle, we had quantitative easing, and it's probably one of the reasons why Bitcoin was so strong throughout its entire move up. And then right here at the top is 69,000, quantitative easing stops. And so I'm not saying that this is the top of the entire cycle by any means. I'm just saying that that happening was a huge fundamental reason for why the price of Bitcoin was going to go lower. All of that new money that was being injected into the stock market, into the equities market, was no longer being injected anymore. And so when the equities pulled back, Bitcoin pulled back with it. Bitcoin is highly correlated to the equity markets. And so when such a huge thing, like a 12-year cycle of quantitative easing, when that ends, it's inevitable that it's going to cause some short-term bearish price action from Bitcoin as well. And so there's a few major reasons why I believe we didn't have quite as bullish of a cycle as what we saw in 2017 or any of the prior ones. On top of that, we also had Bitcoin that was banned by China. And so while that's happened many times in years past, the difference between our last cycle that we were in when they banned it was Bitcoin was already worth $1 trillion in market cap. It needs money from China to come into the market. We're at a point in Bitcoin where it's so big that we can't just let China, the number one adopter of Bitcoin, ban it and then just say, oh, Bitcoin's going to go straight to 250,000. And I was naive in believing that as well. I didn't think it mattered because, Bitcoin had been banned by China many times and it didn't matter in years past. I was naive in thinking that. And that actually happened here at 65,000. That was when we saw this first drop. China banned Bitcoin, Bitcoin drops. We make another new all-time high, and then quantitative easing stops here, and then we got our bear market. So this cycle, there's been a lot of things correlating with driving the price lower. And that's kind of given me an idea of why I want to talk to you guys about what our bear market bottom is actually going to be. Because we could look back at prior cycles and see that our price action in this cycle is very different. I mean, this was our blow-off top in 2018. This was our blow-off top in our last cycle in 2020, 2021. So there's a huge difference here, right? It's not nearly as parabolic. And so our bear market also looks very different. Bitcoin sold off 70%. We consolidated in this triangle for 8 months, and then we sold off another 50%. We haven't seen anything like that. It's not really anything like prior bear markets. What we saw was about a 50% drop onto this 30K support. We saw, a little bounce, nothing too crazy, about 50%. And then we got another 50 to 60% sell-off. This was about a 63% sell-off. So we saw two instances of these big jerking type sell-offs. The first sell-off, buyback, second sell-off. Now the question is, do we get a third one, or are we going to develop somewhat of a foundation here? And based off of the short-term price action, it looks weak. I mean, that's just my opinion. And this is actually the block or the BLX chart. So this looks even stronger. If we actually went to a normal chart, this would be a red candle that would be closing below. And so what that tells me is that this is actually weakness. Based off of the price action itself, it looks like we're just going to keep going lower. I mean, this is literally just us rejecting off of descending resistance twice. And so until we get a break above like this, I'm just going to continue to expect that we're probably going to see one more drop inside of this move. But at the end of the day, I don't think it necessarily matters all of that much. My guess is because the price action looks very different, it looks nothing like the 2018 bear market. It honestly doesn't even look all that similar to the 2013-14 bear market either. This one looks more similar to the 2018 bear market. The only one that we could really draw a conclusion on would potentially be our first bear market that we ever had. But even then, I mean, I'm not really looking at that as anything alike. It's vastly different still. Look at the blow off top here. I mean, it's still very different. And so I'm not really personally looking at our current bear market, comparing it to any of the prior ones, aside from the time frames. That's the only real comparison that I think that we can make between the two, is the time frames. The bear market length of consolidation, it's stacking up on par with all of our prior bear markets. And that's something that we were spotting out in my last video, talking about bear markets on average are about 1 year in duration. And we're getting really close to that 1 year point. In fact, the first week of November will be our 1 year mark from our cycle top. And so that's kind of what I'm watching. For me, I'm watching November, December, somewhere right around there for our cycle low. Based off our price action in the short term, honestly, there's a lot more weakness than anything. The fact that the short term trend is down leads me to believe that it's most likely just going to continue to go down. I'm not really expecting a whole lot until we can get above this descending resistance, as well as our 50-day moving average. In my opinion, that's kind of our big area in the sand. We're not really able to get back above, and with our most recent attempt at a breakout getting stuffed, that's another reason on why I'm expecting that this is going to go lower. But why does all this matter? What does this actually apply to kind of how the price action is going to look on our short term? Well, because our entire bear market's different, because we're having such a continual sell-off, and because our bull impulse wasn't quite as parabolic as prior cycles, I honestly expect that whenever we do get a true bottom, whether that's, relatively where we're at now or whether we get one more low, I honestly expect that a V bottom is going to take place. I'm not really expecting another one of these type of things where we consolidate for a couple months and then we start and then we make like these higher highs and higher lows and we just kind of start consolidating and building up before a breakout. I'm not expecting it to be very similar to our prior cycles. Notice how this is 1 year down, pretty much 1 year sideways, and then another 1 year of trending up. So like 3 years inside of this big bowl shape formation. And then that's what led to our 1 year of extreme euphoric price action. I really don't expect that this cycle is going to be that similar in that regard. So far the price action is very different, and what I would be expecting more or less would be a pretty strong move off of these lows, whether we go for one more or not. I would expect a pretty strong move where we probably would make somewhat of a V bottom like this, and that's where we would see a lot of institutional money get into the market. Probably there'd be some positive news that would come out. Maybe China would unban, maybe something like that. There's always big events that happen at the bottom of cycles that always gives a lot of confidence back into the market. And so we can't predict what that news event will be or what it could potentially amount to. But I will say that during the bottom of the cycle, because of the fact this bear market's been vastly different, I don't think that we're going to go sideways for 3 months or a year. I don't think that's going to happen at all. I think that if you're not willing to buy when we get this dip, you're going to miss out on the dip entirely. And this thing could easily start rallying up much quicker than people realize. I mean, let's assume that this is going to behave nothing like prior bear markets. Let's assume we get a quick V bottom off of our next low, and this thing literally rallies straight back up to about 40 to 45K. So more right back up in there. That'd be about the 618 of this bear dip. So yeah, imagine if we ran all the way back up to the 618 in here, which is a very, it's actually a really consistent area that the market will rally back up to after a bear market consolidation. In fact, if we look over here inside of our last bear market, I'd argue we probably went higher than the 618. No, we literally hit perfectly off the 618. So yeah, this is a prime example of that. Oftentimes what you're going to see inside of a market, not always going to be this way. Bitcoin in 2015 didn't do this, but I've seen a lot of altcoins do the same thing, where after a bear market, our first rally back up into the new bull cycle, a lot of times we'll come back up and tag anywhere from the 382 all the way up to the 618. And so I really would not be the least bit surprised to see this same thing kind of play out inside of this new bull market. Let's say we bottom at the end of this year at some point, 2023 opens up, and we just instantly get a strong buyback all the way up to the 618. If that happens, do you know how many altcoins are just going to be exploding, especially after such a massive sell-off? I mean, we reset all the way back to 12K, and then we bounce straight up to 45. You already know that so many altcoins are going to be exploding. And so I think that the best thing that we can do is be prepared for a strong bounce to the upside, because that's personally how I'm playing it. I'm not going to be waiting around for this slow, multi-month process of us building a foundation. I personally think that our foundation is going to be more of a V bottom, because this looks really oversold to me. And I could be wrong, but that's the way the price structure looks. This cycle is very different than any of our prior bull markets, and because of that, it's also making our bear market much different. This looks very different than any of our prior bear market cycles, and so I honestly believe that when the next bull market flips, it's most likely going to continue to be really different and catch a lot of people off guard. Every bull market that I've been in so far in crypto, it's always been really different. There's always things people say like, oh, this has never happened in these cycles, it's definitely not going to happen again. And it always seems like the things that have never happened in a cycle are the things that happen in the next one. And so that's why I'm sitting here trying to tell you guys to expect the unexpected, because when Bitcoin bottomed here at $3,200, most people, Peter Brandt, Haejin Lee, a lot of those OG traders that people really look up to, they were calling for $1,800 here. They weren't expecting a big move to the 618. And then the people that were bullish down here, that were telling people to buy, they were bullish to maybe 7K, 8K max. Nobody expected that we would just shoot beyond this 6K support floor so easily, because we took 8 months to consolidate on it before we broke down. So nobody was expecting this type of a move. And then that's exactly when it happened. We went straight to 14K. I, along with many other people, felt like we were getting left behind. And that kind of was that case. But the market flipped all the way back down, pretty much erased the entire move. And so in the same way that nobody expected it to go up so high, nobody expected it to go all the way back down and retest the range lows of the bear market. And so with this bear market being so different, I honestly think that a lot of people are going to miss out on buying this bottom, because it's probably going to end up playing out similar to what we saw at the COVID bottom. Just a quick sell-off that gets bought up, because there's going to be a lot of institutions looking to do the exact same thing when that dip opportunity comes. So anyways, guys, if you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these videos. Wanted to give you guys an update on what I think is going to be playing out. Could be wrong, could be right. At the end of the day, it really doesn't matter all of that much. The big thing to remember is when we're comparing it to the prior bear markets, we're right on par with the coming end of this bear market consolidation. So if you've been this long, if you've held through this long, continue to do the same thing that you're doing. There's no sense in quitting right at the end. Right as we're about to see the light at the end of the tunnel. Hold on, hold strong, and you guys are going to be rewarded. It's always the patient people that are willing to hold through the most turmoil of the cycle that get rewarded in the long term. So if you guys found value in this, leave a like, comment, subscribe, join the Discord server, download my free ebook, get access to my VIP group, follow all the trades that I take. Links are in the description for all of it. Thank you guys so much, and with that being said, I'll catch you in the next one. As always, peace out.